Hello guys, welcome to the 3D market commentary for today, Monday, January the 24th. Let me just put the disclaimers up there on the screen. They are up on the top left-hand corner. Please read them. I won't read them to you, so if you need to pause the video to read them, by all means do that. Now, my name is Becky, just in case you've never joined us before and you don't know who I am. My email address is down here. It's Becky@tradictive.com, and there's also support@tradictive.com. So two different email addresses that you can use, and I'll show you a link in a second that you can also go if you have questions and things like that. So our 3D market commentary is a video that we do every day to accompany an email that we send out every day to our free members that looks at different world markets and the elements and the statistics and the probabilities associated with them. So we'll get onto that in just a second. Let me just bring up this link for you. It's tradewithufos.com/Becky. And from this link, you can get different apps and platforms, some of which are free. You can scroll down and you can book one-on-one coaching with me if you'd like. You can also scroll down here to this sort of frequently asked questions section, where you'll see other people have asked questions and the answer is there, so you can learn from that. If you cannot find the question that you're looking to get answered, you can log in for free, post the question there, and we will answer it there as well. So it kind of helps other people later down the line as well if people ask their questions in this space, and therefore we answer them in this space. Okay, so I said that we send out an email every day, so let's bring that up. You might notice this one is actually Friday's one. For some reason, my emails weren't working this morning, so I didn't get today's one. But we're going to be focusing on the charts anyway as to what's going on, and we'll use this just as a crutch, as a basis. So I said that we look at multiple different markets and we look at the statistics and probabilities involved. We call it a 3D approach because we're looking at three separate elements. The first thing we want to look at is what we call market climate, which is the upcoming market direction. Basically, where do we have probabilities? Do we have probabilities that the market goes up, probabilities that the market goes down, or not enough probability either way? That then gives us an idea of what we're going to do. Are we going to buy it? Are we going to sell it? Are we going to do nothing? Now, we use an app to help us with this. It's called AutoClimate. It's a free app on most platforms you can get it on. And if you ignore the lines and focus on the dots, what AutoClimate is doing a bunch of analysis and coming back and telling us where we have probabilities, up, down, or nowhere. So if we have a thick blue dot, like that one there, that tells us probability was up. If we have a thick red dot, like that one there, that tells us probability is down. If we have a thin dot of either colour, say that one or that one, that tells us probability is neither direction. So we're going to look at that per market to see where the probabilities lie. We'll then look at buy and sell UFOs. UFOs in this case stands for unfilled orders, and what it means is where we find buyers and sellers. Now that's relevant because lots of buyers are likely to push the price up. Lots of sellers are likely to push the price down. So we want to know where they are because they're likely to push price up or down, and it gives us an idea of where we might buy and sell. So these green little UFOs, using our AutoUFO indicator here, or our app, show us where the buyers are, and the little red ones show us where the sellers are. So we'll look at that per market as well. Where are lots of buyers and sellers that could push price up or down in these markets? And then we'll look at market volatility, which is how quickly we might expect these markets to move. So we start with the S&P 500. Let me scooch that over a little bit if I can. There we go. So we'll start with the S&P 500, which is the top 500 US stocks. Now, as we can see here, we have a thick red dot on our AutoClimate, and easy to see with our eyes anyway. Price is moving down, probability there to the downside. Now, we have gone past what's normal in terms of a move to the downside. It would usually only go down for 3 days, and we're on the 6th day now to the downside, but still probability down. We are overextended, but still probability down. We have sellers here between 45.94.25 to 44.37.75. And we've got buyers all the way down here at 41.23 to 40.55.50. Overall, probability down here with the S&P. By the way, every market we're looking at, we are looking at daily charts. Of course, different things happen on different time frames. We are looking at the daily time frame. Now, from a volatility perspective with the S&P, we would expect that it would move up or down in 1 year by 26.84%. So in 1 day, that is 75.35 points up or down. In a week, 165.87 points up or down. And in a month, 345.29 points up or down. That's the S&P. Now, the next market, just moving on, is crude oil. Now, as I load this, just to bring your attention up here to the different courses that we do courses in futures, stocks, forex, backtesting, trading plans, and psychology. Now, most of our courses come with a 3-month complimentary access to the apps. Now, AutoClimate is a free app. On most platforms, you can use it on anyway. AutoUFOs is a paid-for app, a monthly subscription. Depends on which platform you use as to how much it costs. You can subscribe directly to them. You don't have to do a course in order to use the AutoUFOs. You can just get the AutoUFOs. Most of the time, though, it's actually cheaper overall to get a course and then get free access for 3 months than it would be to just have access to the apps. So check that out. Okay, coming back to our charts here, let's just make this a little bit bigger, easier to see. So we have with crude oil a thick blue dot probability to the upside. Now we are very much overextended in this market. We would usually go up for 7 candles in a row, so 7 days. We have been going up now for 22 days. So we have gone past by more than 3 times what is normal in terms of a move to the upside. Now that doesn't mean that things are going to turn around now. We've been going past what's normal each day and it's still been going up and up. We still have probability upwards, but the further we go past what is normal, the less likely it is to keep happening. So just bear that in mind. Now we have buyers here at 80.47 to 77.83, not that close to them right now. So overall, probability to the upside coming here from our climate. Now in terms of volatility with oil, we would expect movement up or down in 1 year. 41.15%. So in a day, that's 2.18 points up or down. In a week, 4.79 points up or down. And in a month, 9.98 points up or down. That's crude oil. Okay, the next market is gold. Now, as I load that, just to point your attention here to our coaching and support. We do a lot of coaching and support for free online on YouTube and Facebook and LinkedIn. We also have our frequently asked questions area and emails that you can send us all for free where we answer your questions and give you support. We also have a closed coaching community which gives access to our members to have more of our time. So check that out. Okay, so with gold, let me just squidge this down so we can see what's going on. With gold, we've got a really interesting situation right now because we have a thick blue dot, probability upwards. We have buyers here between 1829.3 to 1804.7 that have already worked. Price came in, hit these buyers and was moved up. That's what buyers do, is push price up. That's why we want to know where they are so that we can buy there too. So we've got 2 things there pushing to the upside. But what we do have are lots of sellers also pushing to the downside. So the sellers are here between 1873.3 to 1844.2. They've already worked as well. Price came up, hit the sellers and was pushed down. So what we have at the moment are 2 competing forces at about the same area. We've got sellers pushing down, we've got buyers pushing up. Both working, the buyers have already worked to push price up, the sellers have already worked to push price down, but they're very close to each other. So overall, if you had to call it, we would say that we still have probability upwards because of the climate. However, for me, it's not a clear run upwards. We've got lots of sellers in the way. I don't want to be buying where lots of sellers could actually push price down. So overall, I would say we should keep out of this one and let it do what it's going to do. Let it clear a path one way or the other, and then we'll take it from there. With volatility on gold, we would expect movement up or down in 1 year by 15.09%. So in a day, that's 17.44 points up or down. In a week, 38.39 points up or down, and in a month, 79.91 points up or down. So that's gold. Okay, the next market is the US dollar. Here it is, let's bring that up. So with the US dollar at the moment, we have a thin dot, meaning not enough probabilities either way. Unconfirmed, doesn't know what it's doing. I wouldn't be surprised if we see this candle close similar to where it is now. Wouldn't be surprised to see this confirm itself to the upside throughout the week. But for the time being, it's unconfirmed, not sure what it's doing. Now we have sellers up here at 96.67 to 96.33. We have buyers down here at 95.335 to 95.03. Overall, not close enough to either of those for them to do anything today. So overall, unconfirmed, keep away from it. No point trading something that you don't have clear probabilities in. In terms of volatility with the US dollar, we would expect a movement up or down in 1 year by 5.87%. So in a day, that's 0.35 points up or down. In a week, 0.78 points up or down. And in a month, 1.62 points up or down. That's the US dollar. Okay. The next market is backed Bitcoin. It's our final market. I didn't need to do that. I have it on here. There you go, backed Bitcoin. Now, as we can see there, it's been dropping and dropping and dropping for a while. Let's just put this all on the chart just to show you. If I really squidge this here, we can see it reached its high of about 68,000-ish, 69,000-ish, round about middle of November. And we've just dropped consistently since there. It's been thick red dots, probability down, 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 down. And we are currently at 33,655. So kind of halved in value, really, if you think about it from the top to the bottom. So at the moment, still probability downwards. Now, that could be seen as good or bad. If you've been holding Bitcoin this whole time, that's not good. If you are waiting to get in, it's now half price, right? It's now cheaper than it was. Now, what we have here is thick red dot, probability downwards. We have sellers, but they're reasonably far away now. They're up at 43,590 to 41,362.5. But we have buyers right here. In fact, if I move my mouse, we can see it better. These buyers are between 32,820 to 31,615, and price is very close to them. So yes, we have probability down, but we're about to have buyers that are likely to at least push price up a little bit. So at the moment, again, I would say not a clear path either way because of the fact that we've got competing forces. Probability down, but buyers coming in. So buyers and sellers fighting each other. I would still keep out of it. I don't want to get involved in that fight. I want whoever's going to win so that I can then jump on that and take it where it's got clear probabilities. Now, in terms of volatility, we would expect that Bitcoin might move up or down in 1 year by 65.32%. So in a day, that's 1,596.53 points up or down. In a week, 3,514.6 points up or down. And in a month, 7,316.23 points up or down. So that's the last market. Now, for each of these markets, what we've looked at are 3 separate elements. We've looked at market climate, where the probabilities lie, up, down, or nowhere. And we've used, in fact, if I bring back up the dollar, because it gives me different examples, we've used auto climate to help us figure that out. Did we have a thick blue dot, and therefore probability was up? Did we have a thick red dot, and therefore probability was down? Or did we have a thin dot of either colour, and therefore probability was neither direction? We've looked at that per market. Then we've looked at buy and sell UFOs. Where do we find lots of buyers? Where do we find lots of sellers that could push price up or down respectively? And what does that mean to our probabilities? And then we've looked at market volatility, which is how far we expect these markets to move within given periods of time, or how quickly we expect them to move. Now, the last thing we want to be aware of as traders is our weekly economic calendar. We get this from fxstreet.com. We filter high impact news. What we want to know is, what are the scheduled news reports that scheduled news reports that are coming out that could impact our markets. Now today, where this is last week's, this was Fridays instead of Mondays, I don't actually have the updated one here. So I would suggest that you go to fxstreet.com/economic calendar, filter by high impact news, and then filter by the markets that you look at or the countries that you trade in. And then you can figure out from there what news reports could be affecting your trades. If you have any questions, the best place that you can go to is tradewithufos.com/Becky, because from here you can log in for free, post the question publicly, we answer it publicly, we all learn from here. Or it might be that you find that somebody else has already asked the question that you're thinking of and the answer's already there. You can also, from this link, get different apps and platforms. You can book one-on-one coaching as well. If you feel uncomfortable to post questions there, you can email me, which is becky@tradictive.com. So by all means, use that if you feel more comfortable. So guys, that is the end of our market commentary for today. I'll be back on Thursday for the next one. We, of course, have sessions in between. Boyan will be taking the market commentary tomorrow and Wednesday. We'll also have different sessions throughout the week. So tune into our different sessions. Again, most of them are out there for free for you to watch. So we'll see you guys on those. Any questions, reach out. Otherwise, have a great start to your trading week, and I will see you soon. Take care. Bye-bye.